Hello everyone, in this video today we're going to be going through the topic of payroll taxes and bonus agreements. So first we have some Social Security taxes. Okay, that's one type of payroll tax. These are taxes levied on both employers and employees, and they are used to provide benefits for certain individuals. Okay, employers must collect the employee's share of the tax and remit it to the government along with the employer's share of the tax. So in the United States, the way that these taxes are written in the Internal Revenue Code, which is the code for, it's the tax law basically, right? The way that it works is that the employers must collect the employee's share and remit it to the government, okay? Because the government's worried that employees are not going to pay this tax unless unless the employers collect it for them, okay? So then employers are on the hook for collecting this tax, then remitting it along with their share, okay? Because both the employers and the employees pay this tax, okay? There are two components to the Social Security tax. There's the FICA portion, Federal Insurance Contribution Act tax. This is a 6.2% tax levied on employees' gross wages up to $118,500. After $118,500, the tax is 0%. So it goes down from 6.2 to 0%. This $118,500 is adjusted for inflation. So if you see a different number in the textbook or somewhere else, don't worry about it too much. Basically on the exam, either it would give you the number or, just memorize this because I think this is the current one, but it could change over time, okay? So Medicare tax, it's a 1.45% tax. The second part of the Social Security tax is Medicare tax, 1.45% levied on employees' gross wages, not limited to any dollar amount, so it's always there no matter what dollar amount you're at. So we have a total tax of 7.65% up to $118,000, and then 1.45% after $118,000, because after $118,000, the FICA tax portion goes to 0, so all you have is the Medicare tax left. And before $118,000, you have 1.45 plus 6.2, that gives you 7.65. Okay? So that's Social Security. Then we have our next tax, which is going to be unemployment tax. These are taxes levied on only employers. They're only levied on employers, and they're used to provide support to unemployed workers. There are two types of unemployment taxes. These will be the Federal Unemployment Tax Act and the State Unemployment Tax Act. Those are FUTA and SUTA. The FUTA is levied on employers who meet either of the following criteria. Basically, if the employer pays wages of at least $1,500 during any quarter during the current year or the previous year, or the employer employs at least one individual on at least one day in each of 20 weeks during the current year or the previous year. Okay, so these are just things you should be aware of. Don't necessarily need to memorize that, but just be aware of it. If an employer meets either of these criteria, then they have to pay FUTA. Okay. Now the rate for FUTA is 6% on the first $7,000 of an employee's income. After that first $7,000, the rate goes to 0%. Okay. So generally speaking, the problems are just going to tell you, oh, okay, these people owe FUTA, they owe SUTA. Like, you're not necessarily going to need to know like the actual conditions, or the criteria that they have to meet, but it's still good to be aware of that. State unemployment tax, SUTA, it varies by state law, but if the employer pays FUTA, they generally pay SUTA, okay? For our problems, they're pretty much always just going to pay both. And then the other thing is a company can receive a credit on its FUTA tax for the SUTA tax it pays. For us, we're not going to worry about this. We're basically just going to say, whatever the problem tells us, we follow. So we follow the numbers given in the problem, okay? So we don't need to worry about credits and stuff like that. That's getting into tax law, and that's getting into things that are beyond the scope of this class, okay? Even though professors will probably just straight up tell you that you don't need to worry about the credits because it's kind of complicated and it's just way beyond the scope of this class, okay? Then we have income tax withholding that are taxes levied on employees' wages. Employers must collect the tax from the employee's wage and remit it to the government. Okay. Next one we have is union dues. This is money paid by employees to fund an employee's union. Okay. So that's all of the sort of taxes, and then we have union dues as well. Okay. And then we have to make one quick note here, and then we just have one last item, which is the bonuses, and then we'll do some problems. So note, for the four items above, which are Social Security tax, unemployment tax, income tax withholding, and union dues, employers generally prepare two separate entries. One for the employer payroll taxes, the employer side, and then one for the salaries and wages payable employee deductions. That's the employee side. So we have an employer side, we have an employee side, okay? we will see this. I'm just noting this now because we're going to see this in the journal entries in the actual problem. And when we get there, we don't want to be confused as to why we're making 2 entries and what's going on. Okay. So the next little piece we have to do is a bonus agreement, and then we're going to move on to some problems. A bonus is an extra sum of money given to an employee over and above the employee's base salary. Okay. If a company decides to give a bonus to its employees, but it has not paid the bonus at year end, it must accrue a liability for the bonus. XYZ company declares a bonus of $100,000 at year end. That means that they would make a journal entry of debit salaries and wage expense $100,000, credit salaries and wages payable $100,000, and that would be the entry. Okay, because they declared at year end, they haven't paid it out, they need to accrue it. That would be a current liability. Okay. So now we're going to go through a few examples of basically the Social Security tax, unemployment tax, income tax withholding, and union dues. We're going to do both the employee and the employer side, and then we're going to have a Social Security income tax phase-out problem. Okay, so this is a 2-page problem. Basically, the answer's on the second page. It's on the first page and the second page. There's not a ton of facts. It's just that there's a lot of calculations to do. Okay, so on January 1 of 2017, XYZ company had 100 employees. During January, half of these employees earned $4,000 each, while the other half earned $8,000 each. Additionally, all 100 employees contribute $100 in union dues. During January, the tax rates for FUTA and SUTA are 0.6 and 5.4% respectively. Now it wants us to prepare the entries to record payroll for XYZ for January. Assume that all employees are subject to an income tax rate of 10%. Okay, so basically what we need to do is that we need to do 2 sides of the journal entry. We need to do the employee side, and then on the second page at the top here, you can see that we're going to do the employer side. Okay, so first, we'll start with the employee side. Again, it doesn't really matter which one you do first. I think generally the employee side is the one that I do first, but you don't necessarily have to do it that way. And again, if it says prepare the entries to record payroll for XYZ, that means both sides of both the employee and the employer side. So we have to do both sides of the transaction, okay? So if it says just prepare one side, it will tell you which side, but if it says to prepare the entries, then that means you need to basically record all of the entries, which would be employer and employee side. Okay, just a quick heads up there. So now we need to go through these different potential taxes, and we need to determine what the amounts are for each side. So Social Security, if we can remember back to what we had in the previous example, if we can remember back to the first page, basically the Social Security tax is basically 7.65% of the employee's gross wages, right? Now, it is technically going to be 6.2% on the first 118.5 for Social Security, and then 1.45% for Medicare, right, which has no limit, right? These limitations, this limitation here is applied to each employee individually, okay? And so we're not worried about that in this problem because technically in this problem, we are only dealing with amounts of $4,000 and $8,000 for each individual employee, okay? So basically, we're not worried about that. So what we're going to do is we're just going to go ahead and say, okay, 7.65% because that is correct. But the reason we're doing it that way instead of dividing them up is because we really don't need to because, again, these employees are only earning a few $1,000s the first month of the year. They're not earning $118,500 the first month. Okay, and again, it's applied on the individual employee level. And so none of these employees hit that threshold. So what we'll do is that, again, if you can remember from the first page, we'll just flip back. It's a total of 7.65% up to $118,500 for each employee. So no employees hit that threshold. So every employee is going to have to pay 7.65%. Okay. So to calculate that, we have half our employees at 4,000. So that'd be 50 employees, right? Half of 100 would be 50. Half of our employees at 8,000. Okay, multiplied by 7.65%. Okay, that comes out to 200,000 plus 400,000 times 7.65% gives us $45,900. Okay, for our Social Security tax. We'll make our journal entry in a minute. Let's just do all the calculations. Social Security tax is done, and unemployment tax is 0 because it's only on the employer side. Okay, if we can remember back, the unemployment tax is only on the employer side. Okay, income tax withholding is going to be is going to use this 10%, and we're going to multiply $600,000 because that's the employee's gross wages times 10% to get $60,000. Okay, it's literally just the income tax rate they give you times the amount of wages that they make. That's income tax withholding. Okay, and then the union dues are going to be $100 times 100 employees because every employee paid it. That gives us $10,000. Now we can make our journal entry. Okay, salaries and wages expense is a plug. We're going to do that last. Okay, or sorry, salaries and wages expense. Excuse me, that's not correct. Salaries and wages expense is the full amount that they pay out. Okay, so it's the $200,000 plus the $400,000 gives us $600,000. Okay, that's what we do first. Excuse me, I got a little bit confused there. That is what we do first. We debit salaries and wages expense for $600,000. Then we divide it up between all these amounts. The cash is going to be the plug here. Okay, so FICA taxes payable we saw for was $49.5. Okay, we call it FICA taxes payable. That makes sense. The account we're going to use for withholding is going to be withholding taxes payable $60,000. Union dues is union dues payable for 10. Cash is the plug. You just do the math. You get 484.1 as a credit to cash. Okay. These account names, you kind of just should memorize them. If you're off by a little bit, you can probably be okay. But just to be safe, you really should use these exact account names because those are the ones that the professors like to use. Okay. Or they would use something basically identical to this, and it wouldn't make a difference. You would get the points if you use these. Okay. So that's basically the employee side. Okay. So you want to solve for all these different amounts. And then once you have the different amounts, the journal entry is not too bad. Okay. And again, remember, we're recording this on the employer's books. Okay. We're recording the employee side, but again, it's on the employer's books. So these are all payables, right? This is the current liabilities. These are current liability topics that we're going through right now. So all these are current liabilities to the employer until the employer actually pays them off. Okay. Now we have to do the employer side. So let's make sure we have both papers showing so we can see all the facts. Okay. Social Security tax is the same. We're not going to go through it again because once you've solved it once, it's literally the same number on the other side for the employer because it's 7.65% for the employee, 7.65% for the employer. So it's the exact same number as before. Unemployment tax is going to be FUTA and SUTA. Okay, so let's figure that out. It tells us FUTA is 0.6%, SUTA is 5.4%. Okay, so the way we're going to do that is that we have to, so remember, let's flip back to our first page. The rate for FUTA is 6% on the first $7,000 of an employee's income. Okay, the rate doesn't matter as much. What we care about is this first $7,000 of an employee's income. Okay, so that's an individual level threshold as well as the way that we did it for Social Security. Okay, so what that means for us is that for these employees that make $4,000, we're going to tax the full $4,000, right? Because they don't hit the $7,000 threshold in January. However, the employees that make $8,000, those half of the employees, those 50 employees, right? We have to cap them at $7,000. We're only going to tax them for FUTA and SUTA. The employer only has to pay taxes for FUTA and SUTA up to $7,000 of an individual employee's income. So they actually only have to do $7,000 in this calculation as opposed to the full $8,000. Okay, again, that's because the FUTA and the SUTA cap at $7,000. Okay, so what we'll do is that we say 4,000 times 50, okay, and then 7,000 times 50, because again, it's half the employees are making these amounts. And again, they're not making 7,000, but that's the cap. So we just cap it at 7,000. Then we multiply by the percentage that we're given, 0.6%, to get FUTA of 3,300. SUTA, again, same calculations here. It's just going to be 5.4%. That gives us 29,700. Income tax withholding, 0 only on the employee side. Union dues, 0 only on the employee side. Okay, we don't have these on the employer side. Okay, then we can make our journal entry. Okay, so this is where payroll tax expense is going to be a plug. That's why I got a little bit confused before. This is actually where we have a plug on the expense, okay, because we solve for all of these amounts we did up there, and then we plug this. So we have FICA tax payable, FUTA tax payable, and SUTA tax payable for the amounts that are shown up above, okay, and then we just plug payroll tax expense. Okay, so that's the employer side of the journal entries, and we went to the employee side as well. Okay, so that's the end of that problem. Let's go through a very quick Social Security phase-out problem, and then we will be done with this topic. XYZ has one employee who earned $120,000 during 2017. Determine the amount of Social Security tax XYZ will record for this employee. Again, what I mean by phase out is that they're not going to pay the full amount, right? Because, again, FICA tax only goes up to $118,500, right? So what we'll do is that the thing we have to remember is that two things you have to remember. Social Security has two parts, and then the employer and the employee pay the tax. So that means that we will just do our calculation and then multiply by 2, right? Because if we just do the calculation once, multiply by 2, that will give us both the employee and the employer's sides of the transaction, and that will give us the number we need. So FICA is going to be 0.062, which is the FICA rate, times 118.5, because again, we're capped at that rate. Multiply by 2 to represent both the employer and the employee's portions. That gives us $14,694. The Medicare side, again, there's no dollar limitation. It's 1.45% times the full amount of the wages times 2 for both the employer and the employee side gives us $3,480. We add those up, we get $18,174. That's our answer. Okay, so that's the end of this section, and I hope that was helpful.